Welcome to your trading strategy time machine. Here we take any trading idea and put it to the ultimate test by replaying it through real market history. Think of backtesting like a flight simulator for traders. Before you risk real money, you get to see exactly how your strategy would have performed during market crashes, rallies, and everything in between. Ready to test your trading strategy against history? Here's how simple it is to get started. First, look at the left side of your screen. You'll see our main menu. About halfway down, there's the Backtest option. Just click that and you'll arrive at this page you're seeing now. This is your strategy testing command center. Think of it like having a market time machine. We'll simulate exactly how your strategy would have performed during any period you choose. Before we dive into setting up your first test, I always recommend to take a quick look at the documentation. It's like checking the instructions before using a powerful new tool. That way, you'll get the most out of every feature. Let's begin where every great backtest starts, with the basics. These first few options will feel familiar if you've used our Live Strategies feature. You'll select your market, choose an asset, like picking which stock or crypto you want to test, set your time interval, and select which trading strategy to evaluate. Think of this like setting up a science experiment. We need to know exactly what we're testing before we can get meaningful results. Now we come to one of the most powerful parts, the time frame selector. This is your time machine control panel. You can test how your strategy would have performed during specific market conditions. Choose the start and end time for your backtest analysis in the date picker window, or simply enter the start and end dates in the provided fields. Number of data points vary depending on the access level, and latest allowed date will be determined based on user's subscription plan and the chosen interval. Pro tip: try testing the same strategy across different market phases to see if it's robust or only works in certain conditions. Here's where things get really interesting. These settings let you simulate exactly how you trade. Trading volume. This is your imaginary starting bankroll. Putting 100 here means we'll calculate all profits over losses as if you'd traded with 100. Reward to risk ratio. This is like setting your profit-taking and stop-loss levels in advance. A ratio above 1 means you're aiming for bigger wins than losses, like trying to make $4 for every dollar you risk. For example, selecting a reward to risk ratio of 4 means that your take profit level will be placed 4 times farther from your entry point than your stop loss. A ratio below 1 is riskier. You'd need to win very often to come out ahead. Trade mode. Choose between spot trading, just buying and selling the asset itself, or margin trading, where you can borrow funds to increase your position size and even profit from prices going down. Margin trading involves greater risk but can amplify both gains and losses. For those who want to go deeper, we've got some special tools. Dynamic trade. Turn this on to simulate compounding, where we automatically adjust your trade size based on previous wins or losses. It's like betting more when you're hot and less when you're not. Trend integration. Our most advanced feature, for Legend users, it combines your strategy with machine learning that actually predicts market trends before executing trades. Once you've set all these parameters, hitting Run starts the magic. We'll process thousands of historical price points, executing your strategy exactly as if you'd been trading live during that period. The best part? You can tweak any of these settings and run it again to see how small changes might improve your results. It's like having unlimited do-overs in the markets. Let's walk through exactly how we set up this test. We're simulating how the Wave Voyager strategy would have traded Bitcoin over the past 6 months, from December 2024 through May 2025. We've chosen to analyze 1-hour intervals, giving us detailed intraday insights. Start with $100 as our imaginary trading capital. Set a 3-1 reward to risk ratio, meaning we're aiming to make $3 for every $1 we risk. Use margin trading so we can profit from both rising and falling prices. Notice what we didn't select? No dynamic position sizing. Trades stay at consistent $100 amounts. No machine learning trend integration, pure technical analysis. This gives us a clean baseline to evaluate the core strategy's performance. After clicking Run, the system processes every single trade your strategy would have made during this 6-month period, analyzing each entry, exit, and price movement across those 1-hour intervals. This calculation takes a moment because it's simulating real trading conditions with precision. Now that we have the results, let's explore what they reveal about your Wave Voyager strategy. Trade activity. Your strategy executed 38 trades. That's about 1 to 2 trades per week. While only 15 were winners, a 39% success rate, the strategy still generated $77.58 in total profits versus $44.97 in losses. This net positive result comes from your risk management settings. Remember that 3-to-1 reward-to-risk ratio we set up? Win or loss profile. The numbers show beautiful asymmetry. Average win, $2.04. Average loss, $1.18. Maximum win, $6.25, 3 times bigger than the worst loss. This means when you won bigger. The hallmark of a good risk-managed strategy. Risk assessment. Every strategy has tough periods. Worst drawdown, 18.1%. Time factors. Trades lasted about 2 days and 19 hours on average, suggesting this isn't a hyperactive day trading approach, but rather captures multi-day movements. Let's talk about 2 growth numbers that might look similar but tell different stories, like identical twins with very different personalities. CGR, 32%, is your total growth over these 6 months. If you started with $100, you'd have about $132 now. Simple. CAGR, 91.13%, is a bit smarter. It compounds that growth as if it happened evenly each year. Since we tested for only 6 months, this metric answers. If this strategy kept performing like this for a full year, what would the annual return be? Think of it like comparing CGR. I gained 32% in half a year. CAGR. That's like growing 91% per year, compounded. Now, about this risk ratios. Sharp ratio, 3.0. Measures bang for your buck per unit of risk. Anything above 1 is good, above 3 is excellent. Sortino ratio, 5.31. Focuses only on bad volatility downsides. Here, higher is always better. You can hover your mouse over the question mark next to each metric to view its definition. A high Sharp in Sortino means your strategy didn't just win. It won smoothly without wild swings. EAGR helps compare strategies tested over different time periods fairly. For long-term strategies, aim for Sharp greater than 1 and Sortino greater than 2, and a CAGR that beats your benchmark. Want to see how your active trading compares to simply buying and holding? Just click this HODL tab here. It shows what would have happened if you bought Bitcoin 6 months ago and did absolutely nothing since then. Let's see how the lazy investor approach stacked up. Turns out your $100 would now be worth $106.37, a 6.37% gain without lifting a finger. Perfect success rate, 1 trade, 1 win. No stress about timing the market. But look at this. At its worst point, that investment was down 30.93%. That's the HODL roller coaster. Huge swings requiring iron nerves. Compared to your active strategy, HODL made 1/5 the profit, $6.37 versus $32.60, but endured nearly double the drawdown, negative 30.93% versus negative 18.1%. The takeaway is, HODL is like planting an oak tree. Simple but requires patience through storms. Your strategy is more like gardening. Regular care yields better harvests but demands more work. Neither is wrong, just different paths to growth. When you scroll down past all those metrics, you'll find this beautiful chart. It's like the storybook version of your strategy's journey. Let me walk you through what we're seeing here. Candlesticks tell the tale. Each little candle is a 1-hour chapter in Bitcoin's price history. The green ones show prices rising, red shows falling, with wicks that mark the highs and lows during that hour. These green arrows? That's your strategy saying, buy now. V red arrows mean it spotted a chance to profit from falling prices. See how they cluster around turns in the market? That's Wave Voyager doing its thing. The green bubbles mark where take-profit targets got hit, like ringing the cash register. Those red squares? Emergency exits where stop losses kicked in to protect your capital. Hover over any marker to see the exact price, time, and profit loss. Here's the beautiful part. This backtest tool adapts to your trading style. If you are a day trader, try 15-minute or 1-hour intervals. If you are a swing trader, go for 4-hour or daily charts. Mix and match strategies with different risk settings until you find what fits. Your schedule, your risk tolerance, your market beliefs. Final tip. The best strategy isn't the one with highest returns, it's the one you can stick with consistently. Now go explore. Your ideal approach is waiting.